Hello everyone and welcome to Core Training. This is the execution portion of Core Training that deals with order flow analysis. Order flow analysis is one of my favorite new subjects here. I've been really working with order flow over the last 4+ years and really with kind of bringing the footprint on line with regards to helping me with trades. I mean, it's been a fantastic addition to what I typically do. And order flow analysis is one of those things, again, that it really just, it's another approach to helping you see what's going on in the auction. It's helping you see what's happening live in the auction. You're basically reading what the storylines between buyers and sellers and who's getting into prices at which levels and where the stops are and who's winning these battles. So order flow analysis is really nothing more than just reading the story of the buyers and sellers that are engaging that market. And then from there, using that analysis to predict future price movement. So order flow analysis is absolutely the most important market-generated information available to active traders. I always talk about those portions of our trading games that we work on that make the most improvement or the most significant improvements. One of them is risk management. It just makes an immediate improvement to what you do. And the other one is order flow analysis, in that it provides the most important market-generated information that a market can use, an active trader can use, because it's providing you the actual information of the auction. The ability to read this order flow is an essential skill if you want to engage the markets from an intraday level. From a scalper to a day trader, if you want to engage the market, you really have to know how to read order flow. But if you want to engage the market as a swing trader or position trader, or even an investor, the concepts, still apply regardless of the time frame. These are still buyers and sellers. So all of the concepts apply when we talk about order flow, because it's the dynamics. The order flow analysis deals with the dynamics between buyers and sellers, right? And it's of the orders that are being transacted now at the market. And so when you're able to really identify who's defending where and who's looking to take those folks out of their trades, you really begin to see who's winning, who's losing, and then from there you can jump on the train that's winning. And with regards to order flow analysis, the ability to read this in any time frame is essential. Even again, as I say, if you're trading weekly or monthly bar charts in your IRAs or 401ks, it really doesn't matter. I mean, you can do this in any time frame. We're going to look at some examples of some charts from the footprint chart so we can kind of put some faces to the names of these traders, when we start talking about passive and aggressive traders. But again, just know that you don't have to have a footprint chart. You do not have to execute this on a lower time frame. Because all of these techniques still apply, or all of these concepts and ideas still apply regardless of the time frame you engage. So what is order flow? Order flow is simply the flow of orders that are being transacted in the market at the present. And order flow analysis is reading the flow of transactions and future orders to reveal the unfolding story of the market. So that's really important right there. That's the essence of what order flow analysis is. Order flow is the flow of orders, and then the analysis is reading that flow of transactions so that you can reveal or predict what the future price movement or behavior will be. So this analysis, again, allows you to understand where market participants are positioned right now so that you may more accurately predict future price movement. So technical analysis helps you analyze the past. So when we're looking at support and resistance, or trend lines, or whatever the case may be, that technical analysis is the past. Those events happened in the past. But order flow analysis is helping you analyze the present, what is happening now. So that's extremely important, because sometimes you know that a support or resistance level is support and resistance over and over until it's not, right? Sometimes it's support, sometimes it's not. And every single time, whether price holds at a support level or whether it breaks through a support level, it's because of order flow analysis every single time. Because of the flow of orders that occurred at that moment in time is what either helped price reverse off of that support level or break through it. So again, order flow analysis helps you analyze the present, and that's what makes it so powerful, because technical analysis helps you look at the past, but it has no bearing on what will happen right now. Technical analysis says that price bounced off that support level twice in the last week, but that doesn't guarantee that it's going to happen again right now. What guarantees whether it will happen right now is order flow. Is there participants at that level that are being absorbed that is going to lead to a move that rejects at that level, or will prices push through that level because parties are looking to expand the range? It's all about order flow, right? Absolutely. It's hindsight versus sight. It's what's happening now versus what's happening in the past. So order flow analysis allows us to execute trades with the precision of a scalper, while our professional trade management approaches allow us to limit risk while letting winning trades run like a day or swing trader. And that's really what I really love about order flow analysis. This is where I really began to be able to enter markets with precision. Because before, I would enter a trade and I'd have a pretty decent stop, and I worked over time. I think this is kind of the progression of a professional trader, is that you start out, as a novice, and your stops are much wider. And I think as you go along, you know how to limit the adverse excursion, because your trade location becomes so much better, because you're able to read the order flow. And when you're able to read the order flow and identify that great trade location, you don't need as wide a stop, right? You don't get as much adverse excursion. And so not every market is conducive to this type of analysis, but when the market is flowing with great volume and volatility and the market is engaged, the order flow analysis is unmatched. You can see things in the order flow that you just cannot see with any other type of charting. You're literally seeing inside the bars when you're looking at order flow in the footprint. And so order flow analysis is reading the flow of transactions and future orders to predict future price movement. And order flow is orders being transacted right now. Order flow is the present. Order flow analysis allows you to see inside the auction. Order flow is the most important market-generated information, and order flow is what moves price. So every single one of those details is very, very significant, because that's the edge that order flow gives you. Remember, we want leading information. There's nothing more leading than order flow that's happening right now, because if someone big gets trapped right now, that has immediate implications on where price is headed in the next few moments, and perhaps in the next few hours, days, or months. So it becomes very, very important to be able to read this type of analysis. So order flow analysis is the ability to read the ongoing battle among market participants and understanding who's positioned where in order to identify where price is likely headed next. This battle is what moves price each and every time. This is extremely important. Remember, when we were talking about the intraday analysis in part 2 of our core training, and we were talking about the European traders versus the overnight after hours traders versus the RTH Open US traders, it was reading the order flow and reading the positions of those market participants that had been getting paid. Who was in those trades and who was influencing those moves, who was getting paid, where are the stops, and who are the counterparties that are looking to come and gun for those stops, right? So order flow analysis is the ability to read that ongoing battle among market participants. And it's all market participants, right? It's short-term scalpers versus swing traders versus OTF responsive traders versus institutions and countries and all kinds of stuff, depending upon the instrument you're trading. And so, you have to know who you're trading against. And that's what I love about this analysis. And again, it was another one of those aha moments for me, was being able to apply this type of analysis and put a face to the people who are trading against me or trading on the other side of me, or put a face to the people who are trading alongside me, right? And when I was able to put a face to the market, because the market is a market. It's a collection of people out there trading. Even if those people have machines trading for them, it's still a collection of people out there trading, executing their biases, right? So you have to be able to identify who those folks are, who those participants are in the auction, and then identify, when they're successful or when they're failing. And from there, you know exactly what to do. You look to run the stops. And so order flow participants, there are 4 types of participants, and we talked about this before when we talked about the types of market participants in the auction. There's the auction market participants and there's additional participants. So the order flow participants are part of the additional participants. And these are the aggressive buyers and sellers and the passive buyers and sellers. So an aggressive buyer is a market participant who buys using a market order. And these buyers lift the offer. So they're sitting there hitting the offer, lifting the offer using market orders, right? An aggressive buyer. They're considered aggressive because they must transact that order now. Maybe it's a stop. Their stop is getting hit, so it needs to get out now. It can't wait. Maybe, they're using a stop market order to enter a trade and they want to stop into a trade. They need to get in now. They're aggressive because they need to transact now, okay? And that means something because when those buyers or sellers become trapped, big types of moves and reversals occur, and that's what we're looking for. Aggressive sellers, exactly the same thing, just flipped for a seller. It's a market participant who sells using a market order, and these sellers are hitting the bid. That's selling using market orders. You're hitting the bid. And these sellers are considered aggressive because they must transact the order now, right now. On the other hand, you have passive participants. And so you have an ongoing battle between aggressive buyers and sellers and passive buyers and sellers. So if someone's hitting the bid, or if someone's lifting the offer, right, using market orders, then there's someone on the other side using limit orders that is absorbing that supply or demand. Those are passive participants. So a passive buyer is a market participant who buys using a limit order. And these buyers are considered passive because they wait for better trade location. So I'm usually a passive buyer. So instead of buying, if price is pushing up, instead of buying during this move up, I'm usually saying, hey, come back and I'll get the retest right there. So I put a limit right here. That makes me a passive buyer. So when price is coming down, you have a limit order right there, sitting there waiting. An aggressive buyer doesn't do that. An aggressive buyer says, just get me in, no matter what the price, right? So a passive buyer is considered passive because they wait. They're waiting for better trade location. And passive buyers, they absorb aggressive order flow using resting bids. So aggressive order flow is an aggressive seller. An aggressive seller, right? So a passive buyer would use limits and they would absorb an aggressive seller's orders using resting bids. On the other side here, you have a passive seller, and this is a market participant who sells using a limit order. And these sellers are considered passive because they wait for better trade location and they absorb aggressive order flow using resting offers. So a passive seller will be absorbing aggressive buyer order flow. So if an aggressive buyer is lifting the offer, then the passive seller is using limit orders, absorbing that demand. So understanding how aggressive and passive market participants make up the order flow and reading the story of the auction through these participants is the key to unlocking future price direction. And this is the order flow playbook right here. So these 6 items are the order flow playbook. You have if passive buyers do one thing or if passive sellers do one thing, then something will happen. So this is the actual playbook that you're looking for. So with the actual playbook right here, if passive buyers successfully absorb aggressive supply at a price level, price will reverse higher. Okay? So that means you have limit orders right here from passive buyers. PB, passive buyers, limit orders right there. Right? And you have aggressive supply. Aggressive supply is aggressive sellers using market orders. Right? They're hitting the bid. So if you have sell imbalances and sell imbalances and sell imbalances pounding the level, pounding lots of sell imbalances all off of this level, and price isn't going down, that absorption by this passive buyer right here will cause price to reverse higher, tick up. So if passive buyers successfully absorb aggressive supply at a price level, price will reverse higher. On the flip side of that is if passive sellers successfully absorb aggressive demand at a price level, price will reverse lower. So that's the other side. So if you have resistance right here and price comes into it, and then you start seeing a bunch of buy imbalances, and price buy imbalances, right? That's telling you right there that lots of buyers are entering the market, aggressive buyers, but price isn't going up because passive sellers are using limit orders, sell limits right here, and they're absorbing that demand. They're absorbing that demand, and when they successfully absorb all of the demand, price will tick lower. Number 3 right here is if aggressive sellers sweep the bids of passive buyers, price will tick lower. This is what happened before when I said passive participants can get their stops run. And so you see it often when price drops here after a big drop and then bounces and then starts to form one of these things right here. And so passive buyers are defending over and over and over at these support levels right here. Well, if aggressive sellers sweep the bids of the passive buyers, so you have limit orders right here, right? Limit orders. And those limit orders are resting bids, right? And so if the aggressive sellers are able to sweep through the bids, price will tick lower. So that's what it looks like if passive buyers are defending with these resting bids, but then aggressive sellers sweep those bids. So for example, if you have a support level right here and say a limit order from a passive buyer has 5,000 contracts to buy, 5,000. So price will come down here, and this, you need at least 5,000 contracts of market orders to sell through that level in order to eat away. So maybe 1,500 contracts come through sell imbalance, and then now this drops from 5,000 to 3,500, and then say another 1,500 contracts comes in to sell here, and then this limit order drops from 3,500 down to 2,000 contracts. And then perhaps a large 3,000 contract sell imbalance comes through and it sweeps through this 2,000. And then now you print down to the lowest level below it, right? So that's what's happening. It's eating away at those resting bids. So when you sweep the bids of passive buyers, price will tick lower. If aggressive buyers sweep the offers of passive sellers, then price will tick higher. So that's the opposite. So if you have a resistance level up here and say you have 5,000 contracts to sell here and price pushes up, aggressive buyers are trying to push through those passive sellers right there, right? Those passive sellers are creating resistance. They have resting offers up there. And so, perhaps you have 1,500 contracts again that comes through here to buy. That'll drop this down to 3,500. And then say maybe another, 3,000 comes in here, that drops it down to 500. And now you get, say, a 2,000 buy comes in, and boom, now you break through and tick higher because you've run through those resting offers. Now this is where the money's really made right here. Trapped aggressive buyers and sellers. Trapped aggressive sellers become buyers and fuel prices higher, and trapped aggressive buyers become sellers and fuel prices lower. Those need to be underlined and starred and dotted because that's what we're looking for. When we talk about kurtosis or we talk about fading, overnight pivot, when we talk about, defending LVNs, all those various trigger events, when you combine those trigger events with trapped aggressive participants, that's the order flow confirmation that helps that trade come to fruition. Because again, if you have a big time level up here that you're looking to fade and price comes up here and a large buyer comes in up here, a large buy imbalance, aggressive buyers, and price immediately rejects, now all of a sudden these trapped buyers have sell stops down here, and then they become the sellers that trigger the reversal. So aggressive buyers that become trapped become the sellers that fuel price lower. The reverse can be said for the upside. for trapped aggressive sellers. So if trapped aggressive sellers get caught selling too cheap, then price will leave them behind, and now the upside buy stops get triggered, and then the buyers fuel the prices higher. So these trapped aggressive sellers become the buyers that fuel prices higher. And that's what I said before. When prices are dropping in overnight trading and the open price is way down here, the RTH open is near the lows of the overnight trade, oftentimes the RTH open, you'll see the market just open drive straight up to start running all of the upside buy stops of those participants, and you just see it go like this. And these are the late sellers becoming trapped down here, and then the buy stops come out. So this is basically the playbook of what you usually look for. You're looking for passive buyers and sellers to absorb aggressive participants in order to run their stops, because if they successfully absorbing leads to traps, right? That's what happens. If passive buyers successfully absorb aggressive sellers, they become trapped. If passive sellers successfully absorb aggressive buyers, they become trapped. So that's what we're looking for. And the way that the passive participants are defeated is when the aggressive buyers and sellers are able to sweep their resting bids and offers. So that's the basic nutshell of order flow analysis. So let's go ahead and take a look at some of the chart examples now. All right, we're going to start with this order flow example here from the ES, and this is the one tick higher low rejection. And this one actually came from the current sessions market because it was so pretty. It was so nice. And what I really wanted to do with these order flow examples, there's 8 different examples here, is what I wanted to do was just show you, generally speaking, what it looks like when a top or bottom forms with various events. In this event, this is a bottom that's a one tick higher low rejection. So prices were dropping, they hit this area, bounced a little bit, they found a one tick higher low, and then rallied. So this is what it looks like. So I got it mapped out right here. That's number 1, number 2, number 3, and number 4 here. And then you can see it talks about each of these points here. So we'll go through with number 1. Passive buyers use limit orders to absorb aggressive sellers using market orders. So you can see when price drops into our zone of interest, remember we were looking at an area between 77.5 and 76.5 because that's where our key levels were in the premium trading room today. And when price dropped into those levels, sell imbalance, 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 right? A lot of sell imbalances come in, and yet price doesn't go down, it goes up first. So the first push down right here, you can see price pushes down, and that green stripe right there tells you that price pushed up by the end of that 6-tick range. And then price pushed up here, rotated again, saw more sell imbalances, and rotated up again. So that's what happened there. So you can see that when price drops into a key level, you're looking for sell imbalances because those sell imbalances are aggressive sellers, and if they get short, if they sell too cheap or too low, their upside buy stops become at risk. And so who's going to keep them from getting prices to go lower? It's passive buyers. Those passive buyers have limit orders there. They put the limit orders right here, and it could be, institutions, it could be big fish, it could be anybody, it could be you, it could be me, defending this level. And some like to defend at the level, some like to defend a tick or two above, a tick or two below. So you get a zone here where these limit orders are defending and actually working. You're seeing a rotation. If you're able to see a rotation higher, the counter trend move where we have number 2, that's the most important move right there because that's going to retest the price point that was absorbed by those passive participants. So when price returns here, you can see the first little rotation is the top end of that range and it goes up. Second rotation here comes right on the pivot and then sees additional sell imbalances. Look at those sell imbalances and price pops up. So again, for those of you that are new to the footprint and new to order flow analysis, this right here, these trapped sellers, they're trapped because when these sellers came into the market, they came in as sellers. But now when they leave the market, they're going to be buyers. You're either buying lower to make money, right? you're covering for a profit, or you're going to buy higher because it's going to hit your stop, and that's going to be for a loss. So when these sellers come into the market, they're going to leave as buyers. And those are the buyers that if they become trapped means that when they sell too cheap, price immediately goes against them. That means that now they're underwater in their trade. And so now the upside buy stops are at risk. So in this case, when price comes back to the absorption point, this is the absorption point, this is the retest confirmation entry. This is the point where you will get the majority of your entries that are razor sharp and accurate, and it leads to this type of move. So that's the point right there. So number 2 is where you want to get in on this trade, somewhere on this pullback here. So after you get a move down and it immediately pushes up, when it comes down, you're looking for a defense in this zone ahead of this move. Now, once you start to see that it did defend off that area, and say you got into the move somewhere, wherever it may be, maybe you got a limit here, maybe you stepped on it, because you can put a limit order right here, a limit, and say get me in there, and you're filled, hopefully. You can put a limit order a tick or two above the level, or you can wait to see if a sell imbalance prints, and as soon as it pops up above the imbalance, you can get in right there using a market order, right? You can be an aggressive participant. That's what they were right here. Those are aggressive buyers. And so the best scalpers that I encountered would become an aggressive buyer at this point. I like to put a limit order here and let it come back and see what happens. But some of the best scalpers I traded next to would wait for these two imbalances to print, and as soon as it pops up, they become those aggressive buyers here that are lifting the offer. So that's where you see these orders come in and it steps on them, and that's where you see a push. Now, when price comes up to this point here, past these highs, you can see that there are sell imbalances right here, a lot of sell imbalances. And those sell imbalances is exactly what I want to see. When I see sell imbalances at resistance or above it, it only tells me that there's fuel now. If those sellers don't get paid, the upside buy stops come out, so that's fuel. And so this is a confirmation and gives you kind of, hey, you can rest assured now that there's a little bit more upside ahead. So if you're getting in here and you're watching it struggle and work its way out, as soon as you start seeing these come in, hey, this is doing pretty healthy and good, because this is fuel. Sell imbalances are fuel for an up move. And so once you see a rejection down here, it's a clean move right back to value, whether you're trading ETH VWAP, whether you're trading the mid, whether you're trading VPOC, whatever it may be, it's a move right back to value, and then price just stops. Lee, that's awesome. At least they match for once. That's great. Why wouldn't you get in at 943? 943 is a great spot. It is a great spot, absolutely. That's if you want to be part of those participants that are early on the move. So absolutely. Because again, sometimes, if you have a great level that you like down here, like we knew 77s was a zone, right? You could have a limit where you're in right there. But if price comes in and does this little move, you could absolutely get in on the 943s on that little rotation. That is the micro test. So when I talked about the micro test earlier, that's the micro test. When you get the first push down and boom, it pops up, the first little rotation is a micro test, and then it goes. You see that very, very often. That is a big time entry point, but that's hard to see. If you move this to the right, or move everything from the right over here, and you don't see it anymore, and this is live, it's hard to see that that's a good spot there. So that's why I like to see a rotation off the level a little bit first, and then when it comes back with some spacing of some sort, look to defend. So, this one is a little riskier, obviously, because it's earlier, but it also provides great trade location. This one gives you the same trade location, and it was a little bit more, a little more confirmed, because you did have a couple of rotations up before you came back. So, there's many different ways to enter. Oftentimes, when I was first learning a lot of order flow, and sometimes you have to see it and analyze it and start being right with your predictions before you start using it. So I didn't always enter here or here. I waited for here because it's like, wow, all of that worked out. Well, now these folks are too late because we're moving, so I'm going to squeeze them and get in here and just step on that bit of gas. So that's another entry point. Yeah, Tom's asking a good question here. Would the market delta replay feature let you go back and look at these segments using different P&F factors? I believe so. I believe so. And see, I would be using some of that right now. My goal was to use some of the replays. Just I'm not all the way comfortable using it all the time. Sometimes I use it flawlessly and we're able to see it great, and sometimes I'm fumbling over it and don't get anything out of it. And I don't want to put you all through that. I definitely do agree with the playback approach, going back and re-seeing some of these events as they unfold. Because again, like I said, there's one thing to see a static picture of it; it's another thing to see it unfold. Because this was a little harder. We knew exactly what we were looking at when we watched this happen live. We knew exactly what we were looking for as it played out. Because this is one now we can go back to the premium replay. We can pull that segment that was live from the premium trading room, and we can match it up with this chart, and then overlay the commentary with what was going on. Because this one wasn't easy at first. I mean, it was laboring, and eventually it came back and boom, it went off this level, but it wasn't super easy at first. So being able to see how it's chugging along, sometimes absorption takes that. It takes needing that type of chugging along, because that's what it takes. It takes those market participants to come in, and chug through some areas, let those passive participants absorb, and eventually you see the squeeze. What platforms will the Pivot Boss Masters footprint work on? Well, this platform that I'm using this particular footprint on is Market Delta, but I believe the definition also works for Investor RT. But as I mentioned before, there are other newer footprints that are coming out, for NinjaTrader, eSignal, and the like. So I expect more footprints to come online and be more widely available. And as they do, I'd love to get my hands on some. So even for some of you who have a different footprint that you may be using, when you see some of these events, you could perhaps take a screenshot, email it to me, and then from there we can talk about some of the differences. Because we've had some traders in our room before who had different footprints for different platforms, and it's great to look at those as well, because everybody has a different environment, and depending upon the data you're feeding into it, it's going to look a little different in terms of the numbers. I don't want you to get so hung up on numbers looking like mine so much as I want you to get the patterns down of watching for that sell side imbalance on the lows, and then looking for passive buyers to defend and return prices higher, or looking for those buying balances on highs and looking for passive sellers to return those and back lower. So just looking for that really helps. Oh yeah, Tom, that happens sometimes. Oh, I'll check that out. I'll check out that YouTube channel. Thanks. That happens sometimes, Tom. You're getting gun shy about trying that level of precision. Yeah, 54 contacts to trade at a level. I mean, I remember some of those levels. That's what I mentioned before. You don't have to engage at with this level of precision at times, because honestly, it is very difficult, because there is so much competition, especially if you're trading the ES. There can be so much competition at these levels that it is harder to fill sometimes. And I mean, I've had my orders not get filled right on the level, and then it runs away from me and I don't get in. And that can be super frustrating. So I definitely know exactly what you're talking about. But understanding the precision and being able to pinpoint that, even if you don't enter at that level, at least helps you identify that could be a short-term high or low, or short-term top or bottom that allows you to fade it back to value. So you could still enjoy the meat of the move without having to get the absolute top or bottom of that move. But this is with precision here. I mean, this is only 2 ticks went against the 77s. On the retest, it went into 76 half bounce. I mean, it was a great rotation. Let's see, if trading Forex, can one use order flow for the individual underlying currencies? Absolutely, yeah. You can do what I've done it on is the currency futures. So currency futures like 6E or 6J or 6B, those types of things. So I've been able to do it on that. Now, anything else I hadn't really tried, but for those, yes. And again, with other platforms, I mean, they probably have even more capabilities. So with regards to how I've used it, I've pretty much stuck with some of the futures, but I have used it for some of the others. Okay, let's take a look at this one. This is a one tick new low rejection, one tick new low. And I believe this was also from today because, again, it was so beautiful, so beautiful. And this is one where, again, we always talk about the various ways that the market can reverse or bounce off of a given level. And we talk about the classic W, right? We talk about the one tick higher low, and then we talk about the one tick lower low, right? And so just being able to identify those opportunities when they happen can be huge. And it happened today in the NQ, it happened today in crude oil. This one happens to be crude oil, where prices dropped. Look at all the sell imbalances. I mean, this thing is aggressively dropping. And then all of a sudden, down here, we hit some imbalances off the 43.80s, 43.78s. Can't go any lower, and then prices rotate higher. A little bit of a pullback, try again, and then when prices come down here, look at all of those sell imbalances right there. All of those sell imbalances below, one tick below this low, and all those sell imbalances, and price finishes the range bar on the highs. I love it, Lee. Gotta buy that lottery ticket. Absolutely. So all of these imbalances right here, one tick lower low, I mean, that is about as confirmed as you get with regards to order flow. You have a low, and this was after a sell-off, right? You had a low, you bounce, you come back, you test one tick lower, and look at all those sell imbalances. Look at all the sells here, and it just rejects. And so that is a fantastic look right there. And again, just being able to know what to look for on that type of bottom pattern can be helpful. Again, super red on the bottoms. This isn't even as red as it could be, but you see one big good one here. It did bounce on a couple rotations, and this was nice. Very nice. So passive buyers are down here. You have the sellers here, aggressive sellers, that's what this is, but passive buyers with limit orders right here on this level. And those limit orders are absorbing all of the aggressive sellers, including these. When price rejects, now all of these late sellers here to the move start getting their buy stops triggered, and then price rallies. And now as you go up the ladder, every time I see a big imbalance here as we move up, especially here beyond the previous high, it just warms my heart if I'm already long, because that tells me that that is additional fuel for this. And so again, remember, trapped aggressive sellers come in as sellers, but trapped aggressive sellers leave as buyers. These sellers are the reason that these buy stops came out, right? And so are these and these, right? So all of them on the way up, and especially when this happens at or beyond a prior pivot high or resistance, it's just money. It tells you the continuation is likely going to extend, and so that you should continue to hold on to that trade. So very nice double bottom with a one tick new low rejection on this one. Here's the formation of a bottom, and this was another bottoming event. This one happened in the ES down toward 2079s. And this is a short-term bottom, but short-term bottoms are good too, right? Even if it's a counter-trend rotation. Short-term bottoms are very nice, even if it doesn't go 10 or 15 or 20 points. If you can get a nice confirmed 3 to 5 point move, that's great, right? And that's kind of what we saw here, and it kept on going after that. And so in this case, price drops down, and initially right here in this zone, sell imbalances are absorbed by passive buyers. But the rotations here are very small on the way up, and you can see up here, passive sellers are still absorbing up here. So when these buy-side imbalances came in, larger passive sellers were still defending. So price has to push down through these lows, push down through it, and that's when you see a spike below those lows. So that's where number 2 is, right here, is when price probes new lows, but those sell imbalances down here don't get price to go down. Instead, price pops up. And then once that happens, there's a rotation right here. Again, you're rotating right back into the point that was absorbed. These prices right here were absorbed off the 2080. So when price comes right back to it, number 3 is where passive buyers come in again, and they've put in additional orders there to defend, or existing orders, but they come in and defend further and look to squeeze some more. And so these track participants at number 3 again, that's your retest off the absorption price point, and then that usually leads to a squeeze. And again, when you see this and this come out during the midst of the up move, it only helps to fuel additional strength, right? And that's exactly what you want to see. So when price rotates lower here and 0.4, the first major pullback sees a heck of a lot of sell imbalances. So you have sell, 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 sell. All these sell imbalances here. All of those sell imbalances are absorbed by passive buyers using limit orders, and from there again you see the stops come out. And so every time you see sell imbalances come in, they provide fuel for another move higher in your direction, in your favored direction. So again, this kind of shows it's not a beautiful bottom. It's not one that you would hang on a trophy wall and say that's what it looks like. But this is very, very typical of any normal bottom where it's trying to find some low. It thinks it finds it here, but then it has to probe lower, run those stops, and then go back above. Remember, sometimes the market must first go lower before it can reverse and go higher. And that's this case, taking out some stops below this point, running them down, encountering larger passive buyers, and then seeing a short squeeze ensue. This is order flow analysis when the defense of a volume point of control occurs, and then from there you see the buy the dips approach kind of play out. And so in this case, this is VPOC right here, 44.90. That's VPOC. Back over here, that what you don't see is the sell imbalance going bid and price rotating higher. And so this is the first retest back at VPOC after VPOC went bid. And so when price rotated back into VPOC, you can see, again, large sell imbalances come in right here. Those sell imbalances are absorbed, and then price ticks higher, as indicated right here by the green stripe. That green stripe tells you right there price is pushed higher and closed here, and then continued to squeeze. 0.2 right here, again, those are aggressive sellers coming in at or near resistance. Again, if those sellers don't get paid, their buy stops fuel another advance. So at 0.2, that is the point that's confirming this push and actually leading to the push through that resistance here through these highs. And so when price returns back, after it squeezes through that area and price returns back to retest those highs, additional sellers come in, aggressive sellers, large imbalanced prints, passive buyers defend off of this support level, and then you see a push higher. So if you think about this from a classic perspective, and you say this right here, and you say, okay, that's resistance, and price pulls back, and then you see this move right here. If that area coincides like this with a large sell imbalance, that's how you know price is about to break through that resistance. And then when price pulls back to that area, you want to see additional sell imbalances. That's that area, so that you can see this happen. That's essentially what's happening here, right? So you have a basic resistance, pushes into it, comes back, pushes through it, comes back, makes it support, and new highs. That is basically what's being shown right here. So on the order flow look of it, this is what you're looking for in the order flow. You know, you see the absorption here and you see the push up. You see the trapped sellers lead to a squeeze, and then when price rotates back to the scene of the crime, more sellers come in and they get trapped, and then boom, a fuel up. When price rotates again at 0.4, the counter trend rotations continue to be defended by passive buyers. These trapped sellers right there become the buy stops that get taken out on the ride up here. So a very, very nice push to the upside. You can see the buy the dips flow that happens along the way. That's what I mean every single time. If a market's going up, on the pullbacks, you want to see red. You want to see red down here in the order flow, because that tells you that those aggressive sellers, if they don't get paid, they become the buy stops that lead to the next push higher. That leptokurtosis is very useful. Yeah, absolutely. You can see the big data point there on throughout these areas. Very, very nice. All right, so this is order flow analysis with regards to a one tick new high rejection. One tick new high. And one tick new high is something all traders, especially on the floor, always look at with regards to the ES. The ES is a big, big deal with a one tick new high or a one tick new low. And this is a point where prices were rallying. And at point one, you get a little bit of a buy and balance and rotate off that zone. Kind of unassuming, not a big deal. So you wouldn't really be making a big deal about this if you're watching it live, okay? Where the big deal comes in is when you tick one tick above that level, right? One tick above it with a huge buy and balance, or big relatively speaking, and it immediately goes offered. That's what you're looking for. It's not just that you're printing a buy and balance above that level. It's that when you print the buy and balance, it's immediately rejected. That's part of the entire process here, because you can print this buy and balance up here and it doesn't necessarily mean that it's going to reject. It could sit up here and hold, continue to receive order flow, and then eventually change and continue, right? But it's the fact that price went into that level, one tick beyond it, saw huge buyers there in terms of aggressive buyers, and those participants were rotated lower. Because what's happening? Sometimes you have market participants that are saying, hey, I'm short from here, and so I'm going to put my buy stop one tick above the high, right? So there's an inventory of buy stops there. Additionally, some market participants might say, you know what, after this rotation here, I'm going to put a one tick an entry one tick above the high, and I'm going to use a stop market order. So when price pushes up there, the stop market order transacts a buy, right? And so that's why you get those types of buy orders above those highs right there. You got someone who got short, so I'm going to put my buy stop here. You got someone that says, hey, off this rotation, I want to get long through here for another push up. But instead, what happens is a large passive seller uses limit orders there and says, you know what, I think there's going to be buy orders there to take over. I'm going to take them over. And boom, you hit them, it absorbs, and it rejects. So that's what you're looking for. When this thing comes up and you see it hit, it immediately rejects downward. That's exactly what you want to see. And then from there, you want to see some sort of buy and balances that enter that market and not get paid. Because those buy and balances tell you that market participants are trying to push price back up. They're trying to get in, but it's not doing it. And that's perfect. And price melts right through this support level, melts right through that support. And when price comes back to it, it turns it to resistance. So at point 2, this is a point here that's a high probability entry. It's a high probability entry right there, because when price comes back and you see buy imbalances here, so after you break that short-term support at 89.75, when price returns back to that support and you see buy imbalances at that zone, these late buyers right there get trapped and they become the sellers that lead to the next wave down. And then price drops right into right here, value. So when you're looking for some of these sometimes and you're looking for the one tick new high fade, when you look for it to fade and you look to enter this market, sometimes you're just looking to bring it back to value, right? Again, that's all I say. The scalping approach sometimes just bring it back to value. But that mentality can be used in any time frame, just bringing price back to value. And so that's all this was designed to do. Reject here, bring it back to value, and from there price went on and did what it did. But in this case, this right here, very powerful. This right here, big time confirmation, as was these buy and balances as well. So here is order flow analysis with regards to the formation of a top. And this is also in crude oil, and this was later on this afternoon actually. Again, another great example. There were so many great examples today, but a lot of great recent stuff. And really what we're looking at here is a short-term top again. Because again, we don't have to hit home runs. This is 45.60 and this is 45.15. So that right there, I'm just showing a 45 tick move, right? But 45 tick move per contract is $450 per contract if you get the whole thing. So obviously you're not always going to get the whole thing, but you know that there's movement there. There's enough movement there, and you don't always have to get every single day trade and make it a 3-hour affair. Get in, get out, and move on to the next one. And so in this case, what happens is price rallies. And the first thing here is price gets a big buy imbalance and rotates downward first. And then price tries again, and right here, a large buy imbalances print, a little bit more buy imbalances print above this recent high, and immediately close back below that high. So right here, you see this high? Prices go above it, big buy imbalances, it ticks a little higher, and then boom, the red stripe tells you that prices fall back below that high. That right there is such a big clue sometimes, especially when you combine it with large order flow. And in this case, when price drops back below it, this number 2 point, again, that's the second thing I'm looking for every single time is I'm looking for additional trapped participants to come in and push that move farther in that direction. So if prices are rejected here off of buy imbalances and trigger lower, I would love to see these buyers come in, because if they don't get paid, they become the sell imbalances that further the decline. And then once that happens and price rotates back into the point where they were absorbed here before the break, that becomes a reabsorption point. So that's a reabsorption point, and then from there, this is an area to re-engage as well. You can see kurtosis over here off the edge as well, and that number 3 point is so powerful. Remember, I talk about it all the time. You have these major price points here. Sometimes when you fail here and they're trying to come in and price fails, when it comes back, they're going to step on them. And right there, they're stepping on these trapped buyers, and they're selling and absorbing there. Big buy balances come in, but they're absorbed, and then price just rotates lower. So again, this is what it looks like sometimes. And if it doesn't look like that, you don't have to engage it. But sometimes it's just so clear that when you see a rejection here, and again, you don't have to trade it up here or even here. This is great. This is great. And while you may not have gotten a high, if you execute in here, your adverse excursion is still minimal. A tick or two or 0 sometimes, or maybe 5 ticks, who knows. But on this type of retest, when you retest the absorption point, it is very powerful, and you see the stops come out. So what size of a stop loss above the high would you use? So what I tend to do is for each of the contracts, I have a certain stop loss that I usually use. And then from there, depending upon the volatility of the current market, I'll increase or decrease that size by a couple of ticks on either side, So for crude oil, my standard basic stop is like a 10-tick exit, 10 ticks. That's my standard. And then my first tick target is usually 10 ticks as well. So it's equidistant. So if I get that first tick target, and we're going to talk more about this in trade management techniques tomorrow, the basic trade management techniques. For the ES, I like to use usually about an 8-tick stop, sometimes as little as 6 ticks, sometimes as much as 2.5, 10 ticks, so 2.5 points, 10 ticks. The NQ can vary widely, whereas I typically keep a 6 to 10 tick stop in the ES, typically keep somewhere between an 8 and 15 tick stop in crude oil. The NQ can be vastly different, because one moment it's trading 150 points a day and the next moment it's trading 50 points a day. So it can be vastly different. Sometimes I'm gunning for a 5-point first target. Sometimes it's a 15-point first target for the NQ. So it can vary different at different times. In this case, if you use, again, a 10-tick exit, then whenever price reaches 10 ticks in your favor, see, for the most part, when price gets this top up here and starts to melt away like this, it's the first retest back at the absorption. This is the highest probability odds entry right here for the most part. So if you come in somewhere off of this zone, even if it's here at 45.50, you can use a 10-tick exit up here now. And so when price goes down in your favor, 10 ticks, you're already scaling. Now, depending upon the volatility, like 10 ticks, it just sneezes that down here. Sometimes the volatility in crude, you may want to get 15 or 20 ticks on the first scale. Now, that's what I mean by you always have to keep your finger on the pulse of volatility. And that's what I do with ADR method. We'll be talking more about the ADR method in a few weeks, but that's a way of measuring volatility. So is pivot boss bands with standard deviation, right? And so you just have to know the volatility of certain environments. And I think that comes really hand in hand with trading in general. You got to know the market personality. And that, again, that comes with experience, because again, when I would trade back in the day and I'd have great success, a lot of times it was during those, high volatility times. And then I tried to continue to trade in the upcoming period of time, like the next period of time, using a high volatility approach, but the markets had quieted down too much, and that's when you start to get chopped up and whipsawed. And so, you have to be able to adapt to the changing environment very quickly. All right, everyone. Well, that pretty much does it for order flow analysis. Again, order flow analysis is a fantastic approach to analyzing the market as orders transact right now. It is the order flow that is leading to price movement right now. So your ability to basically analyze the order flow as it's coming into a market and identify those market participants who are going to influence price, that's huge to your trading. When you're able to put a face to the traders that you're trading against or trading alongside, I think it really helps to tie together the storyline of what market participants are doing in the auction. And that, I think, really helps traders. So again, order flow analysis, one of my favorite concepts with regards to the ability to identify great entries and exits in any market. And the ability to identify these concepts in a footprint chart, it's just hard to top that. So I look forward to continuing to provide additional training with regards to order flow analysis in the Masters Dashboard. So thanks a lot again for being part of this training, and I'll see you soon.